All right, welcome to the weekly meeting, April 15th. So earlier this week, I dropped this trade idea in the chat. And the idea was a fugazi on the first day. But if you had taken this trade idea and you hedge, you'd have won this trade. And that's kind of what I want to kind of hit on today is you have to trade what you see, okay? And I try to give people the vision that I have when I drop these trade ideas. So what I'm showing you here on this chart is basically saying that the price came up here, flattened out, right? And it's showing rejection. It can't break this level. The higher time frames at the time was showing that the trade needed to drop, right? It had never retraced to this zone. It was tapping into a order block. This had been a previous order block. They're stacked up on each other, so it needed to retrace. So I dropped this trade idea, and I put my stop loss right where this red line was. But I don't use a stop loss. I use a hedge. So I dropped this along with the EA trade, right? And let's go to the charts so we can see this bad boy. Okay, so for the people asking about hedges, right? If we go back to that 4-hour chart, this is exactly what it looked like when I dropped it, right?
We can only see your Discord.
Yeah, I was just testing you out. So, okay, this is exactly what the trade idea looked like. All right, get off my screen. There you go. Before I dropped, maybe it was right here. Okay, so if you're a hedge type person, right? Then what you have to understand is we're in a level, right? We're protected over here by an order block. So this is the background behind this trade idea, right? So because I already know where we are on the chart, and hey, we never even came down to test this level before we would go back up. And if you think about it, right, if you can think about how price is, it needs to make another order block in order to break through this order block. So you can't make another order block unless the price goes down, gives you a bearish candle, and then gives you a bullish candle. Then the next candle you can tap in and go up. So if you think about trading the way that price moves, then it all makes sense. But I'm getting way ahead of myself. All you need to see as a trader is all these wicks, right? Price is exhausted. Hey man, I can't get through this level, so I need to push down. We already know that it never pushed to this zone, right? So if we looked on the weekly chart, what we wanted to see was, and I think this is this past week's. Well, what we wanted to see was price push down further, and for it to push up through the zone. But whenever I put my my fib on this move from here to here, Let me just throw the fib on so we can see. I know that price needs to come right here, right? I'm aware that this is where price needs to come to my black line right here. So I'm confident that we're going to get the move. I just don't know when. I can see the 4-hour order block setting up. So I'm like, man, we need to be in this move. So I put the trade idea out there. And it was probably before these two candles, but it doesn't make a difference where it was. It's a 200 pip move. You don't need 200 pips. You just need 100 pips, but you can basically sit on the move. So what happened, right? A lot of times in trading, you're not going to be right. So you can see it came down, right? It came down to this equal low. Price goes up past this high, taps into that higher order block, right? But the idea is still holding. So in this case, my hedge picked up. Okay, so if you understand, now you're in a buy and a sell. That's a hedge. So as price pushes down again, you make a decision on where you want to cut. Now, for somebody who's unfamiliar with hedging or want a quick lesson in hedging, this low right here and this high right here is where I'm keeping my hedge, right? If it breaks this high, I can cut. If it breaks this low, I can cut, right? Now, the further it pushes towards this cut area, I'm going to start cutting because my original entry was here, right? And I know that at Smart Money Concepts, whenever a trade goes up and taps in, you can trade it to the next low. So it went a little higher. If it pushes down and it breaks this low, I know I can at least get to this low. But I'm going to assume that we're gonna push all the way down to our golden zone because that's where the trade really needs to go, right? The idea is not bad. Maybe my entry was too aggressive. So if it pushes down and it gets to my entry, I'm going to start cutting my hedge, right? So if I have a 2.0 lot size and I have a 2.0 hedge, I have 41 pips. I can make my first cut at my original entry, and I can have it cut off in these 41 pips. And it doesn't matter. I can cut 0.5, what's 40 divided by 4. Every 10 pips, I can cut off a 0.5 lot size, and those 4 cuts will have me at just the sell position by the time price hits here. And then I can have my sell with my 2.0 lot size go from here to here, right? And that's 100 pips. If it goes to my take profit, that's 169 pips. You're still well within the limits of the trade to pick up your 100 pips. Does everybody understand that? So let's just watch price. Okay, I would start cutting. Boom. Of course, it fell deeply, right? Price fell and pushed all the way down to this low, came back up, and then pushed down to your take profit. Once price pushed to this low, that's TP2 if you understand smart money concepts. It's just all the price is doing is going to your low, right? It's going to the previous low, retracing. Going to the next previous low, retracing. Then it drops all the way down to the golden zone, right? Pulls back up to the moving averages and pushes deeper into your zone. Now it's buying, and I'm going to assume, right? I'm going to assume that price will either have enough steam to break through, or it won't break this high and it'll keep going lower. But the fact that it just pulled back into the 78 from here, right, is basically or close to a 78% retracement from here. I'm going to assume that we can get the negative 27 as long as price keeps pushing up. Is everybody tracking?
Todd, I have a question.
Yes, ma'am.
So when you said when you're cutting your hedge, are you waiting for it to pull back? Because once you have the breaker structure, are you waiting for it to pull back?
No, I don't wait.
Or no?
No, I never wait.
Okay.
I cut mine. I want to have mine cut by the time by my level, right? And the reason why I want to have mine cut by my level is because I want to get the TP, right? Now, once it hits the TP, if it pulls back, then I can close a position if I need to, right? Because the retracement is just a retracement. I understand how price moves. It's going to get your TP, it'll pull back. These are deep pullbacks, which is fine because it's going further down, but you just can't be over leveraged in your position when it pulls back. So
I was just trying to figure out, like, do you cut the hedge like once it pulls back, because then you're not so deep in the red? You know what I'm saying?
No, but you're not going to be deep in the red. So you have to understand, as long as you're not over leveraged in this position, once your original position gets to your original take profit, you're not going to be over leveraged. I mean, you're going to be in profit. So you can hit a TP. Once it hits this TP, you can take your profit. It's going to pull back. You can get you another entry here as it pushes down. Now, what I like to do is I like to throw my fib from the top to here, and I want my pullback. This pullback, once it hits 78, I'm getting in. I don't wait on an order block because I already know where it's going. I just need to see the pullback. That makes sense? So if you throw a fib on, and I can show you another example of this on gold, but if you put oh man. If I fib this move from this top to this bottom, pullback is at 78. If I enter right here on this green candle, I'll go a little bit in drawdown, and then boom, I get all the profit. Does that make sense?
Yeah.
That's all that I do. I don't overcomplicate it. My fib tells me where price needs to come. Price needs to pull back. This is my target area right here. This golden zone. Now, in the golden zone, you see that big A imbalance. So all price did was come down, give you a good feel, and roll out. So if you were anticipating, like if you understand that, like this is a target, then you're not sweating it. You're good. You understand what needs to happen. This take profit, pull back, get another position, probably a larger position because you made money. And then the price pushes on through. So as long as you are following price, you're eating great. You're eating great. I said I was going to show you another example in gold, right? So if I throw a fib, right? Why am I throwing a fib from the top, from gold going from the top down, right? If you remember on Friday, I said gold was buying because gold came down. It made this big move from here down and started retracing. This was the buy up. I threw my fib. Gold needs to come way up here, right? So I understand that I can buy gold on Friday until it comes all the way up here. Now, when I was analyzing this for myself, because this is still where gold needs to go. I know the weekend happened, but gold still needs to go right here. It's probably going to go to this order block, right? So all I'm saying, I throw a fib from the bottom now because gold started pulling back. I throw a fib from the bottom to this move. I expect gold to pull back to the golden zone. Give me my entry. And then I'm riding gold up to the same spot that I have it tagged to go. Just 2 fibs. The reason why I run my fib is because it's the easiest way to do the pullbacks. Now I could do this. You can look at market structure and say, hey man, this is a pullback to this level. How they can push further down. Yeah, it can. It can push further down, but it's more likely for it to retrace to the golden zone of this weekly move because it's going further down, right? If you look at the weekly chart for gold, let me take the fibs off so you can see it. It gave you basically a doji, right? Just like it gave you a doji over here. It's exhausted. Price needs to pull back. If you understand how price interacts with these moving averages, you know price needs to come back at least to the moving averages. There's a big imbalance that needs to be filled. Maybe gold will go and fill the imbalance. But none of that really matters. You just want to know what you expect this week. So you want to know how you can trade gold this week or any other pair, for that matter. As long as you can drop down and see what needs to happen on the charts, you should never be lost. If I have this daily order block right here, I can fib this candle, which I did, and found the golden zone. So I know gold needs to go back to the golden zone and then do a strike. Easy. It's not, I don't overcomplicate it. If you stick to the principles of what needs to happen, then you're going to be on the right side of these trades. And we don't have to make it up because this is just how it works. Any questions? Did everybody understand the how I look at the hedge? Now, I'm not saying that's the only way to do it, but I'm just trying to show you the way I look at it and the way I do it. So everybody got it?
No, I don't got it. No, I ain't finna tell you I got it.
So what don't you understand?
So on your hedge, are you closing your original trade or are you keeping it open?
My original trade is a sell. Let me go back to GA. The original trade is a sell, correct?
Correct. So I'm saying, are you taking the hedge money, then you're waiting for it to
No, I don't care.
retrace?
I don't care about the hedge money. The hedge money will be, you're going to close that as a loss. The hedge will be a loss. So if the hedge if my buy picks up, it's going to be losing as it goes down. I'm just cutting the losses off. The original position is a winner. So if you have your losses cut off by here, right? If you have your losses cut off here, and your winner comes down here to take profit, right? If you take your profit and then you allow the trade to pull back, or you can buy it back up. I don't want to get the complicated part about buying it back up, right? I'm just telling you how to deal with the hedge part. So you lost from here to here, right? But you won from here to here. And when you won from here to here, you're going to win in a full 2.0. You're going to lose in a full 2.0 at this range for probably let me see how many pips this is. So for let's just call it 30 pips. For 30 pips, you're going to lose at a full 2.0. And after that, you're going to lose in lesser increments because you're cutting your hedge off. You're going to win at a full 2.0 for these, we'll just call it 70 pips. So you will be a little bit above break even by the time this trade pulls back, right? Then when you enter here, you already know that you're in the optimal entry zone, right? Because you understand that the pullback happened. It's more, this pullback is an accurate pullback because it's a pullback from where price came from. And price isn't going to just blow through there. You know, we broke structure going down. You got your pullback. You're entering at the 78. So once you enter here, I mean, it's all killer from there. You know what I'm saying? It's all.
I understand how you doing it now. I get it now. I was confused on how you actually hedge. So you enter in on the sale, but you got your hedge locked in.
Right.
You don't quite get to the TP, and it does the pullback. We just entered a little too early. That's why we hit the hedge.
There you go.
And now the hedge is activated since it went above it. But now you know you're at the optimal entry point, so you're gonna enter again at the highest point, and you're gonna lose a little bit on the hit.
But
you're gonna lose a little.
There you go.
Uh-huh.
But this entry right here, I'm gonna do a will entry for me because well, I got the market corner. You know what I'm saying?
I got you.
And I'm not telling you to do that. I'm not telling people. I'm just telling y'all the truth because I know where I'm at right here. You know what I'm saying? Like here
makes perfect sense. That
here,
makes perfect sense.
You might be a little bit blinded, but here, no, I got you. I got you.
Yeah. Okay.
I was thinking you just hedged for like a reversal for reversal purposes, but you actually hedged for both of them.
Yes.
A reversal and to re-enter off of a retest.
Yeah. And mainly for optimal entry because I know, like, y'all might have questioned whether this move was going to happen, but I didn't. I knew it was happening. The problem with this move is on this 4-hour chart, like this is Wyckoff playing out. It's just hard to be deadly accurate, you know, as this thing wishy-washes back. But once it pushes down and breaks this structure and pulls back, man, I got you, you know, like, you know, they can't hide now. Now they got to come see us at the 78. And once they come see you, you can load up and roll, you know. And I'm not telling you to over leverage your account, but what I'm telling you is just to understand that the market belongs to you right here. This entry right here should be your strong arm entry. You should be super confident about this entry.
I got you. That makes perfect sense. I hope y'all understood that because I didn't understand it at first, but I understand that 100% now. That makes all the sense in the world. And all the hedge is doing is just, you know, just making sure you're not super over leveraged, just taking extra money out your plate.
There you go. You're going to see the same.
Anybody else got any questions? Don't be scared to ask.
Yeah, please don't be scared.
Ask your question.
Because the gold trade that I showed you is one that's coming up. It's not one that you in already. It's the same stuff, man. The push down happened for gold, right? All I did was go to this. If you look at the weekly candle, you can't see nothing. You just see this wick. If you drop down to the daily, now you know we got a bearish order block. It needs to pull back. Then you can expect it to drop, right? So, or it's going to pull back and just keep going. But this is the strong arm position down here, guys, because the market can't go anywhere else. It's up against the moving averages. Only thing it can do is tap in and fall, or it's just going to keep pushing and going higher. Either way, you're in it for the buy. And all you got to do is find your entry for the buy. When you drop down to the 15-minute, oh, look, price pushed up. Now it looks like it's going to pull back. I just threw a fib from here to here. The fib tells me my golden zone of the pullback is here. Look, there's an imbalance. So it might come all the way down to that imbalance and you get in down here and it pushes up from there. If you get in down here, this is more than what you need, right? This is basically a 267 pip move. So all you need in gold is a move like this. Back to this high, really. That's all you really need for your price to pay out, right? Now, if you're just using this position tool, right? This will give you 8%. If you protect this one, this move is 8% with one position. So you should make what you need to make on this one gold move, just going back up to the zone, right? If it turns around and sells, it's on and popping. If it keeps going, you just hold it. But one thing for sure, even if it keeps going, you're gonna get reaction at this order block. It's not just gonna blow through these order blocks. So if I'm you, I'm just holding this buy until about 2020 and seeing what happens, right? 2020. Right now, price is at 2004. You got 16 whole dollars to make money. Any questions?
So we wait for it to hit that. So for going on trade gold, like what sort of reaction are you looking for? Are you waiting for it to get outside the golden zone for the retracement to enter on a lower time frame or hit like a lower time frame order block? What's your confirmation?
What do you mean? Like if this is going to drop?
No, what's the buy up? I ain't talking about the drop. I'm talking about.
So the buy up, I'm okay. This is the buy up. Just use your fib. I'm fibbing this move from here to the top. So it made an impulse move and went to the top. Now it's falling down. The golden zone is right here. Right?
Yep.
There's an order block on the lower time frame in my golden zone, but there's also some imbalance right here. You see the imbalance? So what price could do is it could come all the way down to close this imbalance. And if it closes this imbalance, then that's where your entry will be. But all I'm waiting for is if I'm gonna watch price when it gets to this order block. It'll bounce up. It's either gonna bounce and break structure on this 15-minute. When I say structure, you see how this has an order block over here?
Mm-hmm.
Now, when this price breaks through this order block, it's breaking structure down, right? It's gonna come back up. There's another structure over here. It's going to create structure as it comes down. Like you see this level right here?
Mm-hmm.
It'll create another level. It'll create another level. Now, once it gets down here to this order block, it's either going to break those levels going up, pull back and keep going higher, or it's not, or it's going to keep pushing down until it gets here. Once it gets here, then it'll go up and break a level, pull back, and then go higher. Does that make sense?
We just waiting on either one of those.
Right. So for me, this is what I would do, Will. This is how I like doing it. I can take my position and I can cut it in half. I can have one entry here and the other entry at a limit here. And if this get picked up and they don't pick my second entry up, then I know I got to add a position. And I'll add a position once it breaks structure, pulls back, then I can add a position. Does that make sense?
I got you. Oh, it make perfect sense.
And
So
here, and listen.
You gotta wait for it to get react.
Right. But this is how I can make up for it. I already know how I make up for it. So because I have a half a position here and a half a position here, I'm going to be missing these pips, right? Does that make sense?
Okay. Mm-hmm.
So when I get that half position here and it pulls up and it pulls back to let me in, now I can go a little bit heavier right here because I got the market again. I got the market because it pulled back. It already broke structure telling me it's going up, but the pullback is just to let me in. Now I'm gonna get in with a fat frame and we going up higher.
I got you. 220. Yeah, it makes sense.
Okay. Anybody have any questions? Bruh. Nobody got questions?
Not bruh.
Because nobody asking questions.
Somebody got some questions.
I
Ain't
know.
nobody make no money last week, so somebody got to have a question.
Exactly. I mean, it was 1,000 different ways to make money last week.
Yeah. I only made a little bit, and I'm happy for it. I ain't know what the hell I was doing. I made some money, so I know y'all made some money.
Will, this move right here on gold is almost the same as the EA one from Thursday.
Okay.
When we thought about EA, the way you explained it.
Yeah, there's a million different ways to skin a cat, man. You just have to pick which one of them makes sense for you. This is that move that we talked about last week. They got everybody paid. It didn't even go up to where we said it would go. It just fell right out the sky. So listen, this is easy money this week. It's gonna be the same thing. You broke the structure. You're gonna get a pullback. Then it's gonna drop. I wouldn't be surprised if it pulls back to one of these areas that it didn't pull back to last week. Tell you the truth. If you're a chem trader,
Don't you start on this nice Saturday.
I'm trying to get everybody involved. You know?
Oh, you're trying to get a trend line. Okay. There you go. There you go.
Involved, you know, like, you know. We know this needs to pull back because it broke this low, right? I know I put these trend lines, but you can ignore them or just need them, you can see them. But what you got to pay attention to is this low was broken. On the lower time frames, this swing low was broken. You know we're going to get a pullback. Last week, we thought that we might get a pullback to this area. It never touched it. It just dropped. So maybe this week it goes all the way up, touches, and pulls back. If you look at the way this price has been moving, it would be very consistent for price to take care of both of these areas before it falls. So I just want y'all to be able to visualize the possibilities, right? Because if you never visualize what could happen, you'll be down on the lower time frames with blindfolders on, right? If you understand what needs to happen, right? We broke the low, it needs to retrace. So I don't see any wick on this candle. So that means I have to be patient to wait for the move to happen, right? And when it does happen, it's probably going back up to this order block. Now, in order to get back to that order block, it has to break through this order block. So it's not going to be a smooth ride. But when I look at the chart, as I'm dropping down, I need to go identify areas over here, right, that need to be mitigated before it turns around and goes up. So I can see the dotted line where price is. I see an imbalance right here. Maybe price is going to hit 50% of this imbalance. Maybe it's going to close this imbalance completely. After this imbalance, I don't see a lot of other imbalance on this 4 hour, but I can drop down to the 15-minute. And I should have just waited. And on this 15-minute, it's a lot more detail. This was the imbalance that I highlight. There's an order block right here. There's another order block right here. There's another order block right here, right? But I think, you know, there's plenty of structure over here that we can come and look at if price keeps breaking down, right? If price keeps going, you just come back over here, identify, okay, this is the next spot it's going to. This is exactly how you got to trade if you want to be successful. Now, when I look over here, bruh, this thing is already flattening out. So I think that this thing is going to go. If you notice what we've been talking about, price gave you a low, pushed up, it came lower, Now we breaking through these moving averages, right? Price is flattening out across here. So I don't think we'll get lower than this imbalance, right? Maybe we push down into the imbalance. Maybe not. Maybe we just test it. Because the move is going to eventually is going to break through here anyway. But I would think that this price is turning around. And I would think that we're about to go higher at some point, probably pretty quickly. So we'll see what happens in the first hour of trading, but this trade is about to head up. And where is it heading? At least 50% of that weekly candle, right? But probably a little higher. If I throw a fib on this candle, and I really don't like it because I don't really see the wick. Okay, it's a very small wick down there. But if I throw the fib on this candle, my 50%, if I get it from right here, would be 75 pips, right? Now, because I think it's going higher, I think I still like this trade. I still think that we can get 100 pips. I think that the price is at least going to the 78, but I really think it's a high likelihood of going higher. So if you want to take, I like this trade. If you want to take the trade, it will be available to us. Any questions? Brett.
So far we got gold, we got NZDK.
And them JPYs. I don't want to. So does anybody let somebody else look at the one of the JPYs? What about does anybody want to take a crack at breaking down one?
I'll break it.
Oh, go ahead. Go ahead, Prince.
Share your screen, Frank.
All right. Wait, yeah, y'all can see, right?
That's but is that's the pair that you like, the CAD JPY? Wait, what time frame are you on?
Oh, this is the monthly.
Okay.
Well, hold on. I'm gonna do this one.
Which one with CAD? Okay, whatever, man.
I'm gonna do this one. I had already marked the golden zone on the weekly. Wait, so Well, I don't know what else to mark. For real, for real. Oh,
Prince, can you go back to the 15-minute? Oh, wait a minute. No. And then the is that an order block over there? I can't see. Hold on. I don't have my glasses on. Is that an order block? To the left. Because that might be, or did it tap into the order block already?
wait, which order block?
To the that from up by that blue line.
This one?
Yeah.
Yeah, it did tap into it.
Okay. And it dropped a little. Okay.
What is the blue line, Prince? What is that? That's a trend line up top?
No, that's his breaker structure line
Oh,
Yeah.
that
okay.
he just did.
Okay. So what is that yellow? The yellow is a weekly fib?
Yeah,
What is that? That's the weekly zone?
Mm-hmm.
So okay, go back to that chart real fast, Prince. Now, you see where that impulse move started from? No, the impulse, there you go. Fib from there, the bottom to the top. So it's one level below there. Okay. And we'll see if this is, so I think this should probably be a double top in the fall, I think. But, we'll have to see how it plays out.
You gotta pay attention to it.
I think these might.
And I think it's inside a monthly order block too. Just to, it didn't really break it for real. Like, would you say it broke this or?
Yeah, it didn't break the wick.
This pair, it's all right. I think I might trade a different one.
Ha! Are you just, what are you talking about?
I don't know. I feel like it's a better, like that gold trade you just explained, it was real good.
Well, because I made it sound good. I mean, does this have a wick at the top of the candle
Nah.
on the weekly?
Oh wait, do this got a wick? Oh yeah, it do got a wick. A little wick.
Well, it doesn't matter. The other one had a little bit too. But so on the weekly, go on to the 15-minute.
You said go to the 15-minute?
Yeah.
It hadn't started breaking structure yet. Not yet. No, on the,
Yeah, it did.
Put it where we can see it. Now, see how price flattens out?
Oh yeah. Wait, so if it break this, that means it broke structure, right? To the downside.
Well, I don't know why you're down there at the body of the structure. Y'all are funny with me. All right, well, I'm gonna make it bigger so we can see the canvas, Prince. We gotta put these glasses on. That's just my eyes. Huh? Oh yeah, that's giving you bearish order block after bearish order block. I mean, that thing might drop immediately. We'll know within that first hour, though.
All right.
But I mean, to me, you can clearly see, right, that on this 15-minute chart, it's giving you lower high.
Oh yeah.
Hasn't given you a lower low. I mean, to break that level, but it's giving you the lower highs. So, you know, for me, once it breaks these moving averages, it's fair game for me. Right? Because you know, I'm an early trigger guy. I anticipate the move. So it's just because I understand what needs to happen. Like price, you know, we had a whole week of how many pips? 300 pip move.
It was a big move. I'm about to see right now. Sheesh. It was 400.
Okay, so for me, after I see a 400 pip move, I need to see a 200 pip retracement. So I don't have to wait. You know, for me, I understand what needs to happen, so I anticipate it being a sell back, right? I think that monthly order block will hold it, at least for this pullback, and I'm comfortable with that. So you know, I would adjust my position size to it, and you know, I would go ahead and do what I do. But this is what I mean by if you know what should happen, then you should be able to anticipate things and drop down in your chart to be able to find what you expect to see happening. So on these types of moves, if I'm expecting to see price sell, the first thing I need to see on that 15-minute chart is for price to flatten out across it, like it in your picture. Once price goes flat, I need to see it pushing towards the moving average. Once it gives me that cross, you know, then I'm excited. So you have to, as a trader, you have to have some expectations and some criteria. And then you got to ride with that criteria every time. And I'm not saying you're going to be right every time, but you're gonna have some criteria that guide you, and it's going to regulate your trading. Every week, I expect every week I look at a chart, I expect to come and find a move where I can make 100 pips. And I'm very confident that I can do that every week. I think at this point, some of y'all should be confident that you can find it every week too.
Y'all want me to do another one or
Somebody else needs to do.
say one more time?
Somebody else needs to do one.
All right.
Are we doing it for next week's pairs coming up, or are we just picking one that we like?
Well, you can do whatever. You can do one you like.
Okay. Hold on.
That was a great job, Prince. Great job.
Let's see this one. Okay. There we go. Can y'all hear me? Can y'all see the screen?
Yeah, we can see those big ugly canvases.
Sorry.
No, I'm joking. I'm joking. I'm joking.
Hold on. So y'all can't see?
We can see. We can
Even
see.
the people who can't see can see yours.
All right, so this was just what I had for last week. Let me take these off, remove everything. So every week I just remove everything and start over and look at the chart as if it's new. All right, so for the week, this one moved down 260 pips. I'm looking for my book, y'all, so I can write this down. Since I'm marking it up, I might as well take notes.
Oh, that's right.
All right, so week 60 pips. Bearish. Yep, so bearish. Look what it did on the month. Bearish on the monthly. Go back first. I don't see anything significant as far as imbalances to look for. Right here. Let's mark the markets where it's March. So it just broke the low of March. I'm going to make this black. This is a previous low that it has been to it, so it broke this low back here that it went to, and then it has another low that it could get to. Right here. All right, so now I'm just gonna put this line and write what it is, so low. All right, so now I'm going back to my week. And I'm gonna fib my week. So my golden zone is here. So if we're gonna get any pullback, Okay, so we ain't getting pullback, then I'm thinking there, although we're still down. Take this off. And now I'm just gonna drop down to see how price is moving. No. Oh. All right, so that's one new golden zone. It already started moving back up to the golden zone.
Are you asking?
No, I'm talking.
Oh.
Unless you disagree with me.
How can I disagree?
So, you disagree with me?
No, how can I disagree? That big old wick at the bottom, it's moving up.
Okay, so it has 50 points left to go. If it goes all the way back to, I'm guessing this is the 618, it'd be 81 pips. So, all right, let's delete that. Okay, so right now I'm just measuring where I think it's, so it has only that much to go.
Can
I
make a
would
suggestion?
trade,
Can I make a suggestion?
yes,
So you see how it's moved up and it started to pull back?
yes.
So I would fib it from the bottom.
Mhm. Okay. From here to
Yeah.
here?
Yeah.
Okay.
Because it's pulling back. So it needs to pull back to the 50%. Or maybe even that imbalance at the 71.8. So that's probably where you would want to find your entry.
For it to go back up. Oh, that'd be, so that gives me more pips. Okay. All right. Let me name this one. Okay. All right, so now I can measure. So if it comes here, I have 70 to come to the bottom of this, 99. But if it retraces all the way down, back here, let's see, still 89, 90, but yeah, all the way here, 114. So it could do that. But if it continues going with the trend, let me see what's to the side. So we have a possible, if it does go all the way down here to close in this, because there is an imbalance on top of where that 1 hour that retraces at. Let me,
Right. It's a
oops. I'm gonna take this off. So I just like to do that, so it gives me like, okay, that's gonna be blue. So imbalance fair value gap.
there's probably an imbalance below that too.
Below it, okay, let's see. I don't see any, I see this one.
Okay, I don't see any either.
So I see this one,
Yeah, that one's not a big deal. That's above it.
yeah,
But if you drop down the time, go to the 15-minute, let me see.
okay.
You can see that imbalance good on that 15-minute. Okay.
Right here?
No, that one's filled. See that wick over there?
Yes,
Yep.
okay. So this one.
Yep.
All right, so now I'm just gonna see, I'm gonna go back to like maybe the daily. And I'm just looking at where price may come back to. Huh.
You mean as it pushes down?
Yeah.
Okay.
Okay, so we have this. Let's see what it looks like. What's in there? Mm. Let's put this right here. Alright, so price is here. It has, let's take this off. If it's gonna go to this old low. Oh, okay, so to go to this old low, it has 137 points to get to the old low. So basically right here, I'll just be looking for which
That's
one is
after
most
after
likely.
the up move. After the up move, right?
Yeah, well, after the up move, hold on. Let's go. Let me go back to the 1 hour where it was clear. Okay. Mhm. They're on top of each other. But okay, so if I wait for it to come here and just say
I wouldn't.
right here.
I would delete that first imbalance. That first imbalance,
this-
yeah, because it's not a 50% retracement.
So if it does come back from here and just goes down.
No, it shouldn't go
Oh.
down. But okay,
You
I
don't
hear
think it'll go down?
it shouldn't. But go. I understand what you're saying. But go ahead. Go ahead and say what you're saying.
Okay.
If it just goes down.
So if it just goes down, we have 179. But if it comes from here, comes back down here to go back up, it's just to go to here. Yeah, I don't see it really going up. I'll go for down. Let's see. So when here, come back here.
You can go up to your golden zone.
Go back up here. So let's see if it comes back up to golden zone.
And then drops. All the way down.
Oh, that's
All the way down. All the way down. 200.
29.
Yeah. So can I make a suggestion?
Yep.
What is the dollar doing this week? Did you look at the Dixie?
No.
If you're gonna
Dollar.
trade the dollar, it's best to always look at the Dixie.
Right.
Those pair are probably going to do as the Dixie does, or similar to what the Dixie does.
Okay.
So I would look at that on the weekly. Then I would kind of analyze it and see what needs to happen, and then I can have a clearer picture for what needs to happen on the dollar pairs too.
Let's see. So the dollar started going down. It does a retrace. From that week move, from the weekly moves. So it has, I don't even know what that is. Yeah, oh, okay. Why does it look like that?
Because it's an index. It's not a pair, which is cool.
Okay.
But I would agree that it needs to pull back, probably to that level. And even if we don't get the complete pullback to that level this week, then maybe it'll start pulling back, to that level. This week is relatively no news, so it's not going to be as volatile or explosive as it was last week.
Okay.
But I think from I just want you to be able to see that the dollar is showing exhaustion again at this very same level.
I was
So
gonna say, and it hasn't broken the order block that it's in right now. I don't, has it
Which one?
to
which
the
one,
left
Kim?
of it? To
that
the
breaks
left? No,
no, one
over a
next
little
to
bit,
right there.
right there.
Okay.
So it hasn't broken that order block and has started breaking structure back because of that wick. Because of that exhaustion wick, it started breaking structure already to the top side.
Right, going back up.
This
Yeah,
one.
Right.
yeah, that last wick, the last weekly wick, yeah.
Okay.
Because you know how Todd's looking for the weekly candle with no wick?
Mhm.
Because he's anticipating the retracement to happen. When you see the wick, I'm not even gonna say 9 times out of 10. When you see the wick, the retracement has already started.
Right. And if you
And
drop down to
and
the daily,
yeah, and I was gonna say, because it didn't break, it hasn't wick past that order block yet, or did it? Did it wick
Here's-
past the order block?
It's
no,
here.
I don't think it did.
I don't
It's
think it.
right here.
So because it didn't wick past that order block,
Mhm.
my guess is for right now, it's probably going to even go further than that golden zone. It might even go up to that order block.
It will go to that order. It's going to tap into that order block at some point. But go to the daily so we can kind of see.
But no, I'm saying because there hasn't been a break of structure. That's
I
that's
agree.
what I'm trying to say.
I agree.
That is probably going to keep going up for.
What you mean, Kim? So this is the order block,
It didn't break
and this
structure.
week
Put
hasn't.
a line at the bottom of that order block, the wick of that order block.
Okay. This one.
Yeah. Oh,
Okay.
it did grab
Yes, it
the
did.
liquidity
Yeah.
of that part.
Yep.
Yeah.
But go to the daily.
Sure, I'm like, right, hold on, let me make sure I'm right on it.
Yes.
Okay. All right.
That
So,
was
all right.
That's even more of
So
a
now you can see like that's liquidity, right?
Yeah.
That's the equal bottoms.
Mhm.
So price is probably gonna like we were saying, go to the order block that's up there.
it's
This one,
Right.
or this one?
Nope,
Which-
to the top, to that swing high. That
Okay,
order
here.
block right there. Yep,
This one.
yep.
Okay.
it might even grab liquidity from the top of that. But
It
go to the daily chart so you can see what the candles are doing on the level.
Or
Okay, do y'all want me to mark this order block?
To
Yeah,
me,
you
it's already- to me, it's marked by the top of that box you have.
by the golden zone.
By this golden zone?
Yeah, that
I
order
think
block
is that the
starts-
61?
Yeah, it starts at the 61.
Yeah. Well,
You can still mark however you do it. It's
but
your chart.
so this is the order block would be this, right?
Yeah.
Hold on.
The wicks are
Yeah.
included. Wicks are included. The
Wicks are included? Okay, hold
Yep.
on.
So we know for sure it's probably coming to the 618 of the golden
agree.
zone.
I agree, but I think that when you drop down, you see it
Yeah. Yeah.
Drop down to the day.
greater detail. You got the bullish.
So this
order
is the
block.
day.
Yeah, you got the
Mhm.
bullish order block. That, like, to me, there's no doubt that it's going up there. This chart sucks because it's a TVC and it's not a Oanda, but
Oh, okay, hold
no,
on.
there's no Oanda.
I was gonna say I don't think it's Orlando chart for
Yeah,
Dixon.
there's no Oanda chart for the Dixie, but I'm just saying it would look a little differently if it was an Oanda chart. But like to do basic analysis, I still look at this because I think this is very important. You see that imbalance at the top, at the bottom of that blue order block?
Imbalance here,
Yeah, right there.
this one, okay.
I think that's a possible target. And then at the top of the order block, there is a bearish
So-
order.
And it looked like a gap in the market, so it's
Yep.
probably gonna go up there.
I would agree, because I think the dollar has to do a significant buy up, especially after all the movement this week. And then it'll be set to go ahead and keep dropping. We already had on UJ, we thought UJ needed to go way up. So that's why I was biased for this being a good week for the dollar. Might be a good 2 weeks for the dollar. We'll see. But did y'all pay attention to the news this week? Anybody? Everybody? We had bad inflation numbers. When I say bad, I mean it was less inflation than expected. So good for the consumer. But the only strong number that we had was consumer.
Years, right?
Huh?
Years or something like that, I think.
The only strong number we had this week was consumer spending.
Oh, yeah.
Go figure. Y'all still buying Jordans.
Yeah. Okay, so let's go back here again to USD. Where was that?
Yeah.
Okay, so I guess we done. Okay,
Well,
let me-
so this is what I would say. I think that your pair is going to buy up to that order block at least. You see that order block up there? What time frame are you on? What time frame?
I am on the 1 hour.
No, go back to the daily. I think you're on the daily.
Okay,
So you see,
all right.
you see your daily order block up there, that green. Yeah.
This one?
Yes. If the
Yes.
dollar buys strongly, I think you can anticipate price going to at least that order block. Right? So that's the wicks included.
Okay.
So if you mark that order block and then you wait for a pullback to get in this trade and you bought this pair up, it's going to give you probably what you need to get 100 pips.
So right here, because if we don't do the whole thing, just where they kind of overlap. Oh, wait, hold on.
I would do the bottom of that green wick.
Okay. Can you see it?
Yep.
Okay. So like that.
Right. Now, when I drop down to the 15 minutes so you can see what's over there.
Yes. Oh, man. Okay, let's see what happened to it. Okay. Okay.
Okay, there's I see a big order block right there on your 15 minute. There's 2 order blocks.
Two other blocks.
There's a smaller one. You see it?
This one?
No. So go over there to where price hasn't before it comes into the order block, before it comes into the blue. Go no.
Or it comes in
Other side,
here?
other side of the chart.
Other side?
There you go. Right there.
Okay.
Follow price into the blue. All right, go up. Go up. See that up move right there? There's an order block at the top of that up move. Boom.
This one?
There's your order block.
This one?
Yep. I would mark that order block. then I would mark that one right above it. If you go back, you keep following price the way you were following it.
Okay, so there's another one. So this one.
Right there, yep. And if price keeps going up, which it might, and break both of those order blocks, there's an imbalance to fill right above that. And you already have that line that marks the top of that imbalance. If it keeps going past that, there are several other order blocks that you, I mean, you see how you have all those order blocks lined up in your zone?
Yes. And then this imbalance, but it already started coming into the imbalance.
It doesn't matter. It's not closed officially, but it can go to the top of that, right? It can, you could have price.
And come to this line.
Yep. But what if price breaks that? Then what do you look at?
Then what I'm looking at,
If
The
it-
wick.
I'm
there-
looking at the
there are
bullish
several-
order blocks.
Yeah, there. All you got to do is keep looking. Look at the next high. Look at the next high. Look at the next high. Right
So here,
there you go. As price,
here.
yeah, as price pushes up, and you know, eventually it will stop, and it will head back down. And you'll know it's headed back down when it starts breaking structure, right? Breaking the previous established high on the way up.
Okay. Oh, sorry.
You're gonna have to-
All right, let's
You're
bring
gonna have
it
to make
up.
those order blocks go all the way over so you can see them.
Oh, okay.
There's a function in there that you can automatically make it go all the way to the right, like if you want.
Okay, where's that function?
Man, one of y'all know? Go
Double click on, double
It's the
click on,
double,
double click on it. And then,
Okay.
wait a minute, no, double click on the, highlight the box and then double click it.
Okay.
Okay, and then go to style. And see where it says extend to right?
Okay, I
There
see
you
that.
go. There you
Thank
go.
you.
You're welcome.
All right. Okay, so now we can come back over here.
There you go. And now,
Let me
This-
make this one look kind of normal. All right, there we go.
so if you get you an entry at your blue box and you take it to that first little blue box up there, what's the pip count?
Okay, let's see.
Go from the top of that blue box. It doesn't matter.
Huh?
It does. You can do it that. I mean, however you want.
So the first blue box.
Yep.
136.
Yeah, and I think that's not an outrageous trade.
And then the other blue box. 142.
they're really close to each other.
Yep. I think we'll have plenty of opportunity to make it happen if that's what you wanted to trade.
And this would be considered a retracement, right?
Yeah, it is a retracement, but you know, you have a lot of miles in that retracement.
Okay. Okay. That's it. I'm done.
Gracias. So I think we've been on here for what, an hour?
Yeah.
So I'm going to end the first portion of this, and we will start the new video, and then I'll let on the market analysis portion, I'll let TT you know, give her information.
Recording in progress.
Well, I was actually about to stop.
Sorry.
Somebody got an echo.